Hi class. In this video we're going to look at an example from chapter 25. So I did this one a little bit different than I usually do the videos. This is actually a finished problem, but I want to kind of walk you through how to do it. So rather than filling all the boxes, I'm kind of cheating a little bit. I have them filled in, but I wanted to kind of show you how to get to this point. So you can see this is pretty long. This is an income statement. The instructions say we've got some information from the adjusted trial balance of Warmers Incorporated. So it looks like they got two departments. They have some direct costs for Department A, some direct costs from Department B, and those are totaled over here. And then down here there's some things that are not allocated to Department A or Department B. So those are just totaled up over here, and we're going to have to figure out what to do with those. We've got some instructions here that tell us how we are to allocate some things, and these are these expenses that are not allocated. So we're going to look at that in just a minute. All of these are instructions on how to allocate, and then it says to prepare a departmental income statement for the year. And we've got this template. So your template is blank to start with. We've got a Department A, a Department B, and then the totals are filling in by themselves. And just kind of FYI, there was one of these I was doing earlier, and it was marking the totals wrong. The totals are something that I didn't fill in. So if you have problems like that, where Connect is marking something wrong that you did not fill in, if it's not counting off points, and you should be able to tell if you get full credit and you've got X's, I wouldn't worry about it. But if you can tell that it's taken off credit, or if you're just worried about it, send me an email and let me know. Hopefully that is a glitch on maybe in just my account. But anyway, if that happens, let me know if you're worried about it. It seems to take off points. So here's our income statement. We're going to just look at kind of where you get this information. So up at the top, income statement starts with revenues. So we've got our sales returns and allowances. And these amounts, sorry, there's a lot of scrolling involved in this. These amounts are given up here. So you're just going to pull those amounts directly from this chart and bring them down into the correct department. So you've got your sales returns, allowances. That's going to give you your net sales. The next section on a manufacturing company's income statement is the cost of goods sold. So to get cost of goods sold, basically we start with the beginning inventory. We're going to add the stuff, the purchases, and then we're going to subtract out ending inventory. So there's some more detail in here, but that's pretty much the process we go through. So here's our beginning inventory, our purchases, and we're also going to add that freight in, because that goes into the cost of our purchases. So these two kind of get lumped in together. So then we've got and there's a blank line here, and you're going to have a blank line. Don't worry about that. Then there's a delivered cost of purchases, and that delivered cost of purchases is the cost of purchases plus the cost to deliver, which is these two lines here. We're going to subtract out our purchase returns and allowances, and then that's going to give us our net delivered cost of purchases, which is just the delivered cost less that amount. And our total merchandise available for sale is the net delivered cost of purchases plus what we had to start with. So take your merchandise inventory at the beginning of the year and add, let's see, I lost my place, and add your net delivered cost of purchases, and that's going to give you what you have available for sale. You're going to subtract out your ending inventory, and all of this, except for the totals parts, are coming off of that chart at the top. So rather than scroll back and forth, I'm going to do it as little as possible, but it's on the chart. So here's your ending inventory. So then you're going to take your merchandise available for sale, which is what you could have sold, but you didn't sell it all. You didn't sell in Department A, for example, you didn't sell $51,000 of that, which if you subtract that out, that actually tells you the cost of what you did sell, which was $252,600 in Department A, $178,000 in Department B. And then, of course, all these totals should be adding across if it's working correctly today. The next line is your gross profit on sales. Your gross profit on sales is your net sales, which we calculated out all the way up here at the top. Take your net sales and subtract out your cost of goods sold, which is right here. So that's how much you made on your sales after you covered the cost of whatever it is we're manufacturing. All right, moving down in the income statement, we've got all these expenses. So your operating expenses, looks like we've got 4 direct expenses. So we got sales, salaries, advertising, store supplies, and cash over short. Those are direct expenses, and they are listed up here in the chart. So basically, these expenses that are broken out by Department A and Department B, that's your direct expenses. So they're right here. All of these that aren't broken out, we're going to have to do something with those to allocate those. So let's see where we got to. So we're down to here. Then you're going to have your total direct expenses. Your contribution margin is a subtotal, and that is your gross profit, and subtract out your direct expenses. So that'll give you your contribution margin. So in other words, this is what you have left after you pay all of your direct expenses and the cost of your manufactured goods. After you pay for the goods and your direct stuff, you've got this much to contribute to those overall expenses of the company. So here's our indirect expenses. And you'll see, let's see, there are 1, 2, 3, 4, 5, 6, 7, 8. 8 of those. They are on the chart up here. And basically, it's everything else that's left except for this interest income and interest expense. You can forget about those for right now. We'll deal with those in just a little bit. So everything from insurance expense down through those 2 depreciation expenses are indirect expenses. But they're not broken out by department. So what I would do to tackle this, I would list out the expenses, and then I would go back and try to figure out how to break those expenses out. And there are instructions up here that tell you how to allocate. So we've got insurance expense. It says that they allocate their insurance in proportion, or the insurance expense in proportion to the value of their furniture and fixtures, and they give you a little chart. So to figure out how to allocate, we're going to take the $180,000 of furniture and fixtures in Department A, and we're going to figure out, well, what percentage is that of the total value? So we're going to take the $180,000 and divide it by 300,000, and that gives us 60%. So in other words, the company owns $300,000 worth of furniture, and 60% of that is used by Department A, which means the other 40% is in Department B. So you've got a 60-40 split, and that's what they're going to use to allocate their insurance expense. So their insurance expense was $16,000. 60% of that goes to Department A, 40% goes to Department B. So that's where this $9,600 and the $6,400 come from. Then you're going to move to rent expense. And they actually do rent expense and utilities expense have the same basis. So I would do the same thing. It says they use floor space. So we're going to take the $4,900 square feet and divide it by 7,000 square feet total. And that means that Department A has a 70% of the square footage, and Department B has 30% of the square footage. So then you're going to take what the total rent expense was, multiply it by 70%, multiply it by 30%, and that's going to be Department A and Department B's share. Do the same thing with the utilities expense, and those are both up here. There's your rent and utilities, 70-30 split. And there's where they are. We've got office salaries, other office expenses, and office equipment depreciation are done on the basis of gross sales in each department. So to do that, you can either go down here and look at your gross sales, or up here at the chart, look at your sales. It's the same. They did not give us a little chart to look at, but we're going to do the same basic process. So we're going to look at their sales, and they said gross. So we're going to take the 501 $1,000 and divide it by the total sales of $835,000. And it looks like Department A made 60% of the sales, so Department B has 40. So that's how you're going to allocate those office salaries, office expenses, and that depreciation. Uncollectible accounts on the basis of net sales. So let's see, you have to go down here to find that. There's your net sales. So you're going to take the Department A amount, divide it by the total. It'll give you percent, and the rest of it's going to go to Department B. And then finally, depreciation expense in proportion to the furniture and fixtures in each department. So take the $39,000, divide it by the $60,000. That's going to give you a percentage, and the rest of it goes to Department B. All right, so let's see, we've got all that in here. After we allocate all this stuff out, we're going to have total indirect expenses. Net income from operations is, there's your gross profit on sales, and you're going to subtract out all these expenses. So take your gross profit, subtract out your direct expenses, and subtract out your indirect expenses, and that's what you have left from for net income. We still have those other two items, and one was interest income and the other was interest expense, and they're kind of just odd things that go at the bottom of the income statement. They're considered other income and an other expense. So just go and plug those two in here, and that's going to give you your net income. And then the analyze part, you should be able to tell from your income statement which one has a higher net income? Higher return on net sales. All right, so that's how you're going to do that. Well, actually, yeah, mine's Department B, yours may or may not be. So that's the process you're going to follow. If you have any questions, feel free to give me a call or send me an email. My best advice for doing these, because they're so long and the templates are kind of complex, is to follow the example in the books, find a picture of an income statement, and just kind of use that as a pattern and follow that. I hope you have a great week.